looks like we have got ourselves another buy opportunity in Ethereum Classic, along with the rest of the crypto space. If you bought the dip earlier this week, well done. You may still be in the black. However, a lot of you probably aren't. I know I bought a little bit higher than where we are right now. And well, nothing's invalidated so far overall, big picture. I see this as a healthy correction so far, but things can change. Does that mean we have a much lower low coming? Well, stay tuned to find out. This is our 30-minute chart, and I've been pushing out community posts to give us quicker updates on these small-term charts. Check those out. You go to my channel and click on the community tab. I can get those turned around much quicker than I can get these videos turned around. But Ethereum Classic, like the rest of the cryptos, has pulled back. We had what we were calling a 5-wave rally in our larger degree wave 1, a perfect wave 2 pullback, almost textbook standard. But then we actually rallied almost a little too fast, a little too high for our subwave 5 or subwave 1. I'm sorry, subwave 1 on lower degree. And I was suspicious with good reason. We have pulled back so far that we've almost invalidated that this is actually first wave. And really, I've shifted my primary to seeing this at the top of the actual first wave. So therefore, I would move this up to here. This dip was probably a fourth wave, and our third wave, presumably up here. This makes a bit more sense to me. It looks a lot better in the other cryptos, whereas in Ethereum Classic, we haven't had as much of a dip. In some cryptos, we've actually pulled back so far that we have completely invalidated this formerly blue primary pattern. Either way, we should be in a second wave pullback. That's what the orange notation is showing, the yellow-orange. And I don't think we have too much lower to go. We are almost at the 61.8% retrace of this entire thing. We have a clear A, B, C corrective pullback going on. It's a zigzag, it doesn't look like an impulse, which is good because in Ethereum Classic, it looks more clean than some of the other cryptos where it's more vague. I don't see any of the cryptos showing an impulsive pattern to the downside, nothing like 5 waves down. So that is a good thing. So we could go as low as 2650. That would be the 61.8% retrace if we have another dip. We don't really need to start worrying until we get to about the 76.4% retrace. That would be about 2530. And our big support down below is 2340. So if we break that, then a lower low very well may be in the cards. So we're gonna have to stick around for that. So until then, good buying opportunity here. If you're a little bit more cautious, you don't want to buy this early, you'll have more opportunities as we go, especially as we go through the previous top. That would be a good confirmation that the bottom is in. In the MACDs, we are actually curling back up, as you can kind of see there, and you'll see more of that in our bigger picture. Speaking of that bigger picture, this is our daily logarithmic chart, and I haven't really changed much. I've made some tweaks to some of the overhead targets. Ethereum Classic is a little unusual in that it's one of the few cryptos that did not have a lower low on that last spike down that we had on last week of February. I know Bitcoin and Ethereum escaped a lower low as well, but Ethereum Classic is one of the few altcoins that did that. So we didn't see a double bottom like in Bitcoin Cash. We didn't see a lower low like some of the other cryptos. We actually just had a higher low and we've kept going. So it's probably a good sign seeing a higher low. We also see more and more MACD divergence than pretty much any other crypto. You can see right here very clearly if I draw this line here, actually from way back here, we've been going higher and higher as the price has gotten lower and lower. So very clear, well, a very common sign of bottoming, makes it less likely we drop in the box. If we do break that support at, what was that, 2160, the box below still holds. I would expect 1425 to be our target low of choice. There's confluence. It's a 1-to-1 ratio of this A to the B, and it makes a lot of sense from a retracement perspective that we would end up there. I can't see us falling any further in the box. As a matter of fact, Ethereum Classic has actually fallen a little bit less than a lot of the other altcoins, so it has a stronger pattern and possibly may even rally earlier. If we do hold on and start turning around, I expect us to get in this box. Why is this box where it is, and why does it have an A and B? Well, I got to zoom out to show you guys the bigger picture to explain. Just like with Bitcoin Cash and Litecoin and a few other cryptos, I do see us being in a large diagonal pattern, and that means that instead of having an impulsive pattern, we have a 1, a 2, and then your third wave hits the 1.32 or 1.618 extension, and you have a shallow retrace. We have just a lot of whipsaw, everything's in threes, zigzag pattern, deep retrace for the fourth wave, and our fifth wave would not project as high as it would in impulsive structure. So when I put my drawings back on, this is the 1, this is the 2, 3, we're in a fourth wave right now. Maybe we have lower to drop, not sure. And our fifth wave would go up there. Now there's a little bit of ambiguity in Ethereum Classic that I don't see in Litecoin and Bitcoin Cash, in that in Bitcoin Cash, for example, this went a little bit higher. It looks like a convincing 1-2 here. I'm actually going to show you guys what that looks like just as a reference point. You see a 1 and a 2 very clearly. And then obviously in the third wave, or more obviously, it doesn't look like that in Ethereum Classic. So therefore, this actually has an alternate pattern, which is actually still the 1-2 and the 1-2 here. I know the colors all mixed up, but that would be the green alternate pattern, which would have us in the second wave. And if that is the case, this would probably look better with a lower low. And then we would be, well, we have way more upside if that's really a 1-2-1-2 setup, a bit more lucrative, a little bit more robust than a diagonal setup. So why A and B? Well, in diagonals, your subwaves divide into threes. I know it doesn't look like a three wave. This could easily be an impulse. This is a three wave correction, whether it's from here to here. And then this rally can easily be, actually is better described as an ABC pattern. You have an A, B, C up for the A, a small B wave pullback, and then a C wave to complete this rocket launch right here. And you don't, because of the way that thing subdivides, it fits best as an ABC up. So if that is a diagonal, we all clearly have an ABC down, and therefore our fifth wave would also take the form of an ABC. So instead of 1, 2, 3, 4, 5, you have an ABC pattern. It would be a three wave subdivision kind of situation going on here. So something like this, and it would presumably project all the way up to about $1,000. Why do I have this box where I have it? Well, just played with the fibs, really. Expect a standard 61.8% retrace, and based on previous precedents, our AB here, this thing extend all the way to 1.764 extension of the AB. So if I do the same thing here, assuming 61.8% retrace and try making it fit to hit this 1,000-ish target, this box is about where I'd expect our first motive wave to get. So once that happens, I would expect a deep retrace, and you may get a pretty good buying opportunity if that's the case. I'm actually going to bring that B wave down here. So if you're a bit more conservative, could have another opportunity. And where would we extend to? Once again, I'm saying 1,000. There's multiple confluences there. Technically, if this really is a diagonal, I'd expect us to get at least to 2,700 something. But that's a long way up from here. We've seen crazier things in Ethereum Classic, so I'm not going to rule it out. I'm going to leave 1.32 as a conservative target because, again, there is confluence there. It is a strong fib, so very good chance we would hit our heads there anyway before finally being able to blast through it. And, well, if this is a diagonal, expect a blow off top. We'd probably go, well, we'd probably extend quite high. That'd be your manic euphoric stage. If it's more of an impulsive pattern, as I was saying, if this is actually the 1-2 and a 1-2, that's good news too. It makes it even more credible that we would go higher up sooner, because that would be a larger third wave. So anyway you cut it, looking pretty bullish, but we need to get through this short-term bearishness in the short term just to get a bigger setup. And these are, of course, going to be a little tricky because diagonal pattern means you're not going to see 5-wave impulses up. Very good chance you're going to see another zigzag up. So this could be an A, B, and a C pullback, and then you might have an impulse to the A wave. It's not going to look pretty going up. And that is why we need to keep an eye on Bitcoin and Ethereum to give us some guidance, because they're the biggest cryptos. But even those, I believe, are an ending diagonal fifth wave, which I'll cover in other videos. So if you don't want to miss any updates, don't forget to subscribe. And if you enjoyed my video, please give me a like. Till next time, thank you for watching and happy trading.